Hello, this is Lance Zimmerman and welcome to the Cattle Facts Closing Bell for Friday, July 22nd. Today's top story, understanding 2011's feedlot placements. At the beginning of the year, the USDA reported the January 1st supply of feeder cattle and calves outside of feedlots as being down nearly 1 million head. Since that report, monthly feedlot placement and cattle on feed numbers through July 1st have remained relatively consistent with a year ago. With each passing monthly report, industry participants ask, when is supply going to fall? 6 months into the year, the supply situation facing the industry is more clear. It's hard to appreciate the effect weather can have on feeder and calf supplies, especially when it's a drought affecting some of the country's largest cattle states. The U.S. Drought Monitor illustrates the nature of the weather situation facing the lower third of the U.S. The drought that has plagued the South throughout this year started to show up about a year ago and has never weakened. That means calves, typically sent to winter on wheat pasture, were shipped to feedlots earlier than usual. The trend of accelerated calf placements has continued throughout this year, and as of recently, the drought has moved farther north, and grass cattle from eastern Oklahoma and Kansas have began going to feedlots 1 to 2 weeks earlier than previous years. To see this trend, you can look at the Chicago Mercantile Exchange Feeder Cattle Index reported weights. Since June 1st, the average weight of cattle being used to calculate the CME index price was 762 pounds, which is 9 pounds lighter than last year and 7 pounds lighter than the 3-year average. Today, the USDA released its semi-annual cattle inventory report. The estimated supply of feeder cattle and calves outside of feedlots on July 1st was reported at 36.8 million head, down 950,000 head from last year. With feeder cattle and calves being pulled into feedlots at a quicker pace, expect the tighter supplies predicted in both January and July to catch up to the industry near the end of the year, supporting higher cattle prices across the board. Now, your weekly commodity markets. The fed cattle market was quoted $2 to $3 lower this week as cattle traded at $108 to $109 live and $174 to $175 on a dressed basis. Trade volumes ranged from light to moderate. Boxed beef prices softened this week as well. Movement was active as prices came down, especially for the chuck, round, and brisket. Feeder cattle values were quoted $2 to $5 lower on the week, while calves ranged from $2 to $6 lower. Slaughter cows were primarily steady to weak. Large supplies of cattle coming off of grass in the southern plains, along with dry, hot conditions in feedlots, are resulting in lower price levels. The USDA also issued its monthly cattle on feed report today. Cattle on feed came in at 104%, with industry estimates predicting 102.7%. Placements were reported at 104%, with the trade expecting 93.5%, while marketings were noted at 105%, which is 2% higher than expectations. Thanks for watching, and remember to visit cattlefacts.com for your latest market news and analysis.